Imagine waking up one morning and realizing that the same financial giants who just poured tens of billions of dollars into spot Bitcoin and Ethereum products are now starting to funnel serious money into XRP through ETFs. We're talking about Wall Street banks, trillion-dollar asset managers, and global corporations finally getting a compliant, one-click button for XRP exposure. And on top of that, pressure from their own clients who don't want to miss out. In this video, we're going to take a step back and look at the actual numbers, financial institutions, banks, and how much money could realistically flow into XRP over the next few years. Regulations are being pushed through right here in America, and that could unlock trillions of dollars of investment into the crypto space. And honestly, I'd argue it's already started. So let me walk you through this information and really open your eyes to what I'm seeing and what the true potential here could be for XRP holders. Now, if you're not familiar with a spot crypto product, let me break it down quickly. A spot XRP ETF is a regulated fund that holds actual XRP and trades on a traditional stock exchange. It gives investors direct price exposure through a normal brokerage account, without them ever having to buy or custody the crypto asset themselves. Simple, clean, institutional-grade access. Now look at some of the largest fund managers on Wall Street: BlackRock, Vanguard, Fidelity, UBS, State Street, Morgan Stanley, JP Morgan, Goldman Sachs, BNY Mellon. All of them are either already in crypto or actively getting into crypto as we speak. BlackRock's IBIT Bitcoin ETF became the most successful ETF launch in BlackRock's entire history. And we know they're going to be launching ETF products beyond just Bitcoin and Ethereum. We're simply waiting for the announcement, most likely an XRP and a Solana product. It feels like it's a matter of days, not months. Now here's where the numbers get really exciting. If you combine the assets under management across these major Wall Street firms, you're looking at approximately $60 trillion in combined assets. In an ultra-conservative case, just 0.05% to 0.10% allocation. That's already $30 to $60 billion flowing into XRP. In a moderate case of 0.25% to 0.50%, you're talking $150 to $300 billion investment into XRP. And if we could capture just 1% of that $60 trillion, that's $600 billion potentially pouring into XRP, creating some of the deepest liquidity this asset has ever seen. And it's not just the large financial institutions. It's also global banks that now have to make a decision. Do they offer crypto custody and investment services to their clients, or do they sit on the sidelines? I believe the banks that move first will be the biggest winners in the long run. Now, there's a global ranking that covers significant banks across over 100 countries, roughly 1,000 banks in total. These are already on the larger end of the spectrum. Just the top 100 to 200 banks alone hold $150 to $200 trillion in assets. The top 36 banks each hold over $1 trillion, with many sitting in the multi-hundreds of billions. So you're looking at an additional $150 to $200 trillion sitting in global banking. If even a fraction of this starts moving toward XRP, the numbers could push well into the trillions. And of course, you also have to consider large corporations globally, companies that all need some form of AI and crypto infrastructure. Many of them are starting to build digital asset treasury programs. There are 40,000 to 50,000 large companies globally. Even if just 5% to 10% of them adopt active crypto strategies over this next cycle, that implies 2,000 to 5,000 corporations on top of the banks making a move into crypto. Likely Bitcoin first, then Ethereum, and I would strongly argue XRP. These corporations are already thinking about crypto treasury management, cross-border payments, and tokenization. The banks know the future is coming. Regulations are being passed. And if they adopt the technology, using it to move value instantaneously anywhere in the world, they can free up trapped capital sitting in Nostro and Vostro accounts. Where do you think that freed up capital ends up? I'd imagine a significant portion flows directly into the crypto space through ETF products and potentially direct token investment. So let's put some numbers to this. If you had 2,000 to 5,000 corporations allocating just 0.25% to 1% of their capital into crypto assets, you're looking at an additional $150 to $800 billion of potential investment flowing into XRP and other digital assets. These are not fantasy numbers. These are conservative projections based on what we're already seeing happen in real time. Now, I wanted to look at what kind of impact this could have on price. And here's something important to understand. When you invest $100 into XRP, it doesn't move the market cap by exactly $100. There is a market cap multiplier at play, using multipliers of 50x, 100x, and 200x on investment ranges of $64 billion, $128 billion, and $256 billion. You could move XRP's market cap anywhere from $3.2 trillion on the low end to as high as $50 trillion on the very high end. That kind of market cap would imply an XRP price approaching $1,000. And remember, this is based on the very low end of total capital projected to enter the crypto market over the next several years. And we know that BlackRock, there are rumors circulating that they are days or moments away from launching an XRP product. If they move forward, they would likely need between $500 million and $1 billion XRP just to launch this product. Think about that. That's already 0.5% to 1% of XRP's entire circulating float, locked up by BlackRock alone on day one of their spot ETF launch. Now let's look at what's happening with ETF flows right now. Just yesterday, Bitcoin ETFs saw $46 million in flows. Ethereum saw $11 million. And XRP, $13 million, actually outperforming Ethereum. The demand for institutional XRP exposure is very real. And here's another number that should get your attention. We're now sitting at 847.88 million XRP locked up inside ETF products. That's 79% of the total supply approaching lockup. In week 19 alone, 24.16 million XRP was taken out of circulation. Bitwise led with $13 million in a single day on May 7th, with the price sitting at $2.42. Just look at the pace of accumulation. On April 14th, we were at 771 million XRP locked up. Now, we're at 847 million. In just a few weeks, over 60 to 70 million XRP was purchased through ETF products, while the market was essentially trading sideways through all kinds of macro uncertainty. We are rapidly approaching having 1% of the entire XRP supply locked up inside regulated investment products. And there's going to be new products launching once we pull ourselves out of this bear market. We already have digital asset treasury companies like Evernorth coming in to support XRP's growth even further. If more digital asset treasury companies launch and start locking up additional XRP, that could be a significant catalyst for price appreciation. Bitwise already confirmed $120 million flowed into XRP ETFs in a single week, back on April 14th. That was the strongest weekly inflow since December 2025. So yes, we're seeing a slight lull at the start of the month right now. But as regulation gets closer here in the United States, smart money is positioning. That is exactly why I am still buying XRP at these prices. If it goes lower, I'll buy more and bring my cost average down. This is looking more exciting by the week. Now here's something important to understand about what ETFs actually do for XRP. An ETF buys XRP and holds it. It doesn't provide liquidity to the network. It doesn't participate in lending markets. It doesn't support on-chain settlement. It's capital validating the asset without activating the network. But that's still a very good thing. ETFs are how institutions say, we believe in this asset, without yet engaging with what it can actually do. The next phase of institutional participation looks more like capital contributing to market depth, settlement efficiency, and on-chain utility. It starts with, how can I hold this asset and have it appreciate in value? But it will evolve into, how can I now use this asset within my own financial infrastructure to do what we're already doing, only much better and much faster? And this is where XRP can truly shine. Let me show you exactly who is leading the XRP ETF accumulation race right now. Bitwise, 228 million XRP locked up. Canary Capital, one of the first XRP spot ETFs, 204 million XRP. Franklin Templeton, 181 million XRP. 21 shares, 108 million XRP. Grayscale, 47.3 million XRP. And Rex Osprey, 39.7 million XRP. all of them accumulating XRP simultaneously. This is not one fund making a lone bet on XRP. This is institutional consensus forming across the entire ETF market. $2.53 billion in cumulative trading volume over 87 days, averaging $29.1 million daily, with a single-day peak of $113.8 million. This liquidity is deep and consistent. Combined holdings are now approaching that 1 billion XRP milestone. When they cross it, roughly 1.6% of XRP's entire circulating supply will be locked up inside regulated investment products, removed from active circulation, held by institutions with multi-year time horizons. Every week that net inflows stay positive, the available supply shrinks. Every ETF that accumulates removes tokens from the open market. Every institutional allocation deepens the price floor underneath XRP. 831 million XRP locked, heading toward $1 billion. And the price still sits at levels that do not reflect what the ETF data is screaming at us. And it's not just ETF data. The price doesn't yet reflect XRP's actual on-chain utility either. Look at every partnership, every connection Ripple has built globally, working with dozens of central banks, with announcements we haven't even seen yet. What happens when one of those mega announcements drops and everyone rushes to buy XRP at the same time? That's what we're building toward. And Bitwise CEO Hunter Horsley confirmed this directly. He said that institutional investors, right now, in the middle of this bear market, are buying XRP. His words: "There's always a mix. The trading activity creates volume, and volume is a feature for everyone else. But across many different assets, our XRP ETF has taken in hundreds of millions in flows amidst 2 quarters of a bear market. There's conviction out there. Maybe not in every room or at every conference, but the capital markets are broad and deep. And I think crypto is reaching people with conviction." That is not someone guessing. That is the CEO of one of the largest crypto ETF providers telling you exactly what is happening on the institutional level right now. Here's another angle most people aren't thinking about. The stock market is not going to go up forever. We're in a midterm election year. Markets are being pumped. For 101 Burmese chats are looking great right now. But sooner or later, people are going to start taking profit. And they're going to look to rotate that capital back into crypto. That's where things get really interesting. And retail? They're going to come rushing back the moment regulation becomes official. They were here before. They know what this market can do. They're just waiting for the signal. And on top of that, you have companies like Flare building an entire DeFi ecosystem using XRP. If protocols like Flare can lock up 5 billion, even 10 billion XRP, reducing circulating supply by 5% to 10%. That alone could supercharge the price. All of these catalysts are building in the background simultaneously. Most people aren't paying attention, but when they all start converging at the same time, that could be exactly what finally breaks XRP out of this $2.40 range and sends it to all-time highs. Every day, we're watching $11 million, $12 million, $15 million in daily ETF flows. And we're seeing major announcements like JP Morgan, MasterCard, and Ondo Finance making history, with Ripple and the XRP ledger sitting right at the center of blockchain innovation for moving value across borders with some of the largest financial institutions on the planet. Remember, JP Morgan, on some days, moves $14 trillion in a single day. And Ripple is now working directly with JP Morgan through their Ripple Treasury system and their netting solution. There is a lot more to come here. And here's the bigger picture for the ETF landscape. More than 50 spot altcoin ETFs and another 50 crypto ETFs, including single coin spot products, are expected to launch in the United States over the next 12 months. Following the SEC's approval of generic listing standards, the pace of spot altcoin ETF launches is expected to accelerate dramatically in 2026. Solana, Chainlink, Cardano, Hedera, you're going to see it all. And you're also seeing products like the Granite Shares 3x long/short XRP ETF reportedly targeting a NASDAQ launch. This isn't a spot product, so it won't directly affect XRP's price, but it shows how institutions can now leverage XRP exposure in multiple directions within the current system. And UBS? They're already showing up on filings with XRP exposure. Small positions right now, but the foundation is being laid. And I want to close with this, because this is Brad Garlinghouse speaking in a room full of central bankers, laying out exactly the problem that Ripple and XRP solve. And when you hear it, you understand where all of this is heading. Our view of the future is that you don't have to have this pre-funding. Instead, you can use a digital asset to have global liquidity on demand. XRP was built by engineers who saw the flaws of Bitcoin, the scalability challenges. XRP is about 1,000 times faster per transaction and 1,000 times cheaper. The liquidity in digital assets can be applied to make those exotic corridors more democratized, a level playing field for everyone. Ripple's vision has always been to do for value what TCP/IP and HTTP did for information. These blockchain technologies will be the underpinnings of an internet of value, where payments flow the same way data flows today. If you're a large corporation moving $100 million, that's one thing. But if you're a freelancer in the Philippines doing design work for a company in London and you want to get paid $30, that's a transaction that can't easily happen today. XRP makes it possible, instantly, for almost nothing. Listen, I genuinely believe XRP solves some of the most important problems in our global financial system today. And I do think it will sit at the heart of the new financial infrastructure being built right now. The real question is, how much value can XRP capture over the next few years? How many assets will wind up being traded on the XRP ledger every single day, instantly, at almost zero cost? I hope you found value in this breakdown of where ETF money is flowing and why the momentum behind XRP is unlike anything we've seen before. We currently have 7 spot XRP ETF products. If next year we have 10 or 14, and we go from hundreds of millions to 1 billion, 2 billion, even 5 billion locked up in ETFs, that is going to dramatically change XRP's price trajectory. And I cannot wait to get there. Let me know what you think in the comments below. If this video helped open your eyes, drop a like. It genuinely helps this content reach more people. Thank you so much.